Hey guys, welcome back to the channel. In today's video, I will be talking about Bitcoin and its negative correlation to the US dollar currency index DXY. I do want to talk about this pretty strong relationship considering that DXY has started to come back down in light of the recent CPI print, and it's really starting to break its parabolic structure that began back here when Bitcoin peaked in 2021. So first, I do want to explain what I have on my chart. The blue line is the US dollar currency index DXY, and that is scaled to the left axis. And then the orange line is Bitcoin scaled to the right axis. And as you can see, this goes all the way back here to 2011 over the last 11 years for Bitcoin's price history. So what I also have are these vertical dashed lines where the green lines represent a period where DXY has experienced a local maximum. And then the red lines are when the DXY has experienced a local minimum. So let's look at this relationship and start right here in the cycle of 2013. So you can see DXY had this peak right here in July of 2013, and that corresponded to a local minimum on Bitcoin. Bitcoin had this pretty impressive drop from this high right here in April at $166 all the way down to this low around $75. But that being said, this chart only does show the weekly closing price. So from the wicks, this is actually a much steeper decline. But again, that did correspond to this local maximum on DXY. And then from there, Bitcoin started to have that leg up. We turned around, pivoted off this low, and then formed this new all-time high around $1,000. Meanwhile, the DXY continued to drop from a high of around 85 all the way down to this local low around 79. And then after that, DXY started to reverse, and it had this pretty impressive rally going from this low, again, around 78, 79, all the way back up to this valuation around 100. Meanwhile, Bitcoin had that bear market, so you can see that inverse correlation quite clearly. And eventually, when DXY did form this big peak, it started to consolidate for quite a bit, and it really didn't have much more of a euphoric-like rally beyond that. So this vertical green line in March of 2015 really just represents when the bear market momentum for Bitcoin started to reverse and when the bull market momentum for DXY also started to reverse. So DXY again did not have any more euphoric peaks after that. It really just went sideways and did put a higher high later on in 2016, but this was a very subtle higher high, and I would not really consider this entire period to be rising. Meanwhile, Bitcoin again went on that massive parabola, that famous 2017 all-time high at $20,000, and that is when DXY formed its low of around 88, 89. And that was a huge decline coming off the back of this high in 2016, which was around 103. And for the DXY, that does represent a very significant decline. So later on, Bitcoin started to reverse. You can see that peak after we had that bear market. This is when DXY started to trend back up. And then ultimately, DXY formed this second peak right here in March of 2020. And that was around 102. That was when Bitcoin had that pretty quick flash crash down to around $4,000 on that capitulation-like event. We had a reversal from there, and then Bitcoin started to go into this big bull market, about a 16 to 17 extension off of that low from March of 2020 to that peak around $65,000. Meanwhile, you can see DXY continuing that negative correlation, declined from that peak at 102 down to this valuation of around 90 in that same time period. And then from there, DXY had that reversal. And ever since then, it has been on a massive tear, and Bitcoin has been really just continuing down through this big bear market decline, which brings me to today where we have started to see DXY come back down. And although it is unconfirmed and it's very early to say, this could potentially be a local high, local maximum, similar to how we had one right here in March of 2020, in April and March of 2015, as well as June of 2013. So I'm going to switch over here to the chart of just DXY after we've just really gone over this negative correlation. And you can see with DXY, we have had this pretty parabolic-like structure starting since May of 2020. Again, that double bottom around 89 to 90. So ever since then, we have just been going up at a quicker and quicker pace. And we had this peak just a few months ago in September at around 114. But we have come back down quite significantly since then. We're down to 106. And although this could very well just be another dip, similar to the previous moves that we've seen where buyers have started to come up at these higher valuations, this time around we're actually starting to break structure where we're no longer following this general parabola line I have drawn. We've started to form a lower low. We're coming back down to this low that we had in September. I have that marked out here on this dashed blue line around 107.7. Again, that's the area that we pivoted off of and then continued to move up higher from there. And it really does look like a euphoric peak. And to me, this actually kind of reminds me of the parabola that we had for Bitcoin back in the 2017 cycle. If I just go back over here, this is that peak I'm talking about, that parabola where we basically just had a similar move, just increasing at an increasing rate over a very long period of time. But this time it's with DXY, and that has caused Bitcoin again to have a pretty big bear market, declining about 75% off those highs over the last year or year and a half, depending on where you want to measure the cycle peak from. But I also do want to talk about how not only are we forming lower lows on the DXY price, but we're also forming lower lows on the RSI. So with the RSI right here on the bottom frame, you can see that we previously had support being held around this zone at 62. Okay, so that was the level that we bounced right here on this May move where we had that correction from 105 down to 101, and then we continued up higher from there. The RSI came back down, and then we had this move on the RSI from 77 back down to that support at 62, and then we continued higher on the DXY. But this time around, we have not held that as support. We're coming back down, and we have formed a lower low on the RSI, the first time really since this downtrend, again back in 2020. So what's interesting is how we're also coming back below 50, which is the neutral point on the RSI. It doesn't represent a bullish or bearish trend. And what's interesting is how if we start to lose 50, if we really start to come back below this and we're continuing to consolidate under 50, that really does show me that the momentum and this strength to the upside is slowing down. The momentum is definitely slowing down if we are continuing to remain in this 50 period. A lot of people like to point to the RSI in these overbought territories and say it's bearish because it represents that it's overbought. But really, when you're overbought, that represents a bullish structure. Because to be overbought, you need to have buyers coming in, demand coming in at higher and higher valuations. But when that starts to change, when we're starting to come back down to this neutral territory, you're no longer seeing that strength. You're no longer seeing that incredible strength in the uptrend, but really you're just starting to break that momentum, break down the structure, as we're seeing with these lower lows. So obviously this is all subject to change. If the DXY comes back up in the next few months and we have a higher high put in, then we're going to have to look out further from there. But I did want to start out talking about this because the signs are definitely showing of a potential peak. That's not saying that we have to have peaked, but along with this and the CPI print, where we're starting to see inflation come back down, this could really present a narrative in which the DXY does continue to have a longer term peak in place. We no longer continue this parabola. And if we're looking at this negative correlation, that could potentially be bullish for Bitcoin, as we've seen in the past with DXY having these local peaks has corresponded to local lows for Bitcoin. So overall, that is what I'm looking out for. I'm really going to be watching out for this negative correlation, especially into the end of the year as we get more and more inflation data. I hope you guys did enjoy this analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below if you guys want to go ahead and check that out. I'm fairly active over there. I hope you guys did enjoy the content. As always, I will see you in the next one.